Hello and welcome everyone once again to part 2 of True Opens and the PD arrays. I hope you guys are doing well. You had a wonderful day and you guys are managing your risks properly. It's a very tricky week, by the way. It's like a completely chaotic week. Markets crazy, governments shut down, the news is skewed here and there. All you have to do is just manage your risk accordingly and play along only if your A plus setup comes in, right? So I hope this video will be insightful for you in order for you to understand your bias, in order for you to understand where price expands and how it expands, why it would travel from one place, why it would accumulate and where it will accumulate, right? So without further ado, let's just go along with the video. If you have not watched the previous video, by the way, which is of the same topic, but it's a bit basic, so you should go and watch that one, the video which is before this. I'll put the link in the description. And if you're not in my Telegram channel, you guys should join the Telegram group, which is where I share a lot of insightful data, right, regarding the markets. So I'll see you guys there. Getting along on the video, right, we'll just back test what happened today. Okay, we'll just see what the day was like today. So since this is the Euro USD CFD chart, right, the day starts from 5 p.m. right, and it has ended here. We have Tuesday right there in front of us. Okay, and I want you to get along with this video. So it might bore you a little bit, but if you just play along yourself and see what I do in the whole day, you'll realize that how easy it becomes for you to understand where price will expand from or how it will deliver. So first things first, if the day opens at this time anyways, like I'm probably asleep at this time, right? I'm awake now, by the way, but usually at this time I'm asleep. So I don't really care what happens over here. We move forward. What I do is I mark out the 5 p.m. and 6 p.m. openings, but usually I just take 6 p.m. right? So this is the 6 p.m. opening price, right? I'll mark this out. This is for my reference for the whole day, right? This becomes what? The magnet for the whole day. So if I have to be a buyer, I'll have to look for anything which is below it. If I have to be a seller, I'll have to look anything which is above it for me to sell. Okay. What do we have before we move forward? What do we have on the higher time frames? Looking at the 1 hour. We have a clear range of price, right? We have these equal highs here, and we have this one low which is left. And we know that price cannot go higher unless it manipulates lower. So we directly, like, even if you're blind, you'd be able to see that price has to move below in order for it to go higher, right? But it cannot move below as well unless it manipulates higher, then it goes lower, then it goes higher, right? So this thing should be clear in your mind, that it cannot move down unless there is a crack in correlation. It cannot move back up again unless there is a crack in correlation. So since you have this in mind, this gives you patience. Then what you have? You have the framework of how you achieve, or how you just make your footings in the day and how you move forward with it. So since you have the day opening, the day is opening, all right? This is a concept which is given to us by ICT, and it's useful, very, very useful in quarterly theory, very useful. All right, so if we have the Asian session, I'll move forward. I don't really trade Asian session, so I don't care about the opening price of the Asian session, but still it's important, right? I'll just directly move to where? To the opening of the day. I want you to notice one thing, how price moved ahead of it, away from it, right? The opening price, even if I'll mark this one out, right? This is the 5 p.m. candle. 5 p.m., right? How price moved away from it in the morning and then back into it, right there, dropped below it, took out a small short-term liquidity, went back into it again, found resistance, snapped lower, right, into some sort of liquidity zone again, and then moved back up again. So every time a sweep of liquidity is taken, price seeks what the opening price is. Like usually this happens. Like for me, I understand this through this perspective. Like if price is taking out liquidity on one side, right, it has to go back and then report it to the opening price or something. I don't know if it's the case. Then it goes, it's the opening price has sent price back down again to hunt something else. For example, it's this. Then since it took out the opening prices, it has to go back up into the opening price, right? Since there is nothing over here and it has to go lower, the opening price will retarget something which is at the highs, right? So since the lows are taken, the highs have to be taken again. And now for it to go higher, either from an expansion, it can retrace or reaccumulate at a key level. What can be a key level over here? There is nothing but the opening prices. The gap between these prices, they become the key level directly. The fair value gap which is aligned, the gap between the distance itself, this distance itself becomes a key level. So anytime if you see like, you know, the two prices are very much far apart, that's when you know the day is going to be a bit difficult for you to understand, right? So here we go. See the accumulation of price at the opening prices. Now it's building up orders, it's building up liquidity. Took back again these equal highs. Coming back towards where? Trying to come back towards the opening prices, but since we have all these orders over here, right, and the order blocks which are forming away at the true opening, we are reacting from the order blocks, and we are moving forward ahead to hunt down more liquidity which is resting higher. But since we came here, we hunt again what? These liquidities. So we're just moving along the day, by the way, like, you know, it has not even begun yet, but still we are looking at what things to give us reference points. Now this in and itself is a small market maker buy model right there, right? From this high to this low, sweep liquidity, move higher from the opening price being in between, right? But we know that price has to go lower here. So for it to go lower, we need what? We need a Kraken correlation at the highs. Since we took out these highs, right? Now we have what? The true day opening price, which is right there. So we mark out the true day open. Now, since we mark out the true day open, we know that any liquidity which is being taken away from this price has to report it back to the true day open. And then the true day open will send it to another opening price, right? Or to another liquidity zone. So now we have what? A expansion, accumulation, expansion, accumulation, again expansion towards these zones right there, right? Let's see what happens here. We are retracing back up, back down. back up again into the internal or the intraday liquidity zone, which was just created by the expansion, which was the catalyst, or an expansion which happened from the true opening. Now, since we took out this high and we form a crack in correlation right there, right? Since we formed this, we have number one, true CISD, right? And once again, I wanna give this credit to Bucko Trades, right? You guys should go and check out his channel as well. If you guys have not yet, you guys are missing out a lot of information, a lot of it. So this can be an entry itself, this one. Okay, and this one actually was my entry, but I didn't get a clean, fill like this. Instead, I took an entry here because of the spreads or something. Yeah, it was around here. So since we saw this, right, and if you look at the pound at this time, pound was creating a lower high right there. And if how I trade with a crack in correlation like in front of me, and I forgot to mark out the true open of the London session right there, 1:30 a.m. So you see, price went higher, came back down. We created a what? A true open of the London session. Price, the moment we took over or created a true open, price seek out what? Liquidity to hunt. And then it reported back to the true open. True open sent price back up into the to mitigate the price itself, of course, like into the mitigation or the CSD, change in the state of delivery. And we have the target where? Here. Now, this is where human error came in between. This is where my own human error came in. Everything was perfect. The time was perfect. The price delivery was perfect. Crack in correlation was there. Everything was there. And even this zone became very reactive. If you would see here to here, the midnight and 1:30. All right, this will be a bit long video. I don't know if I'll bore you guys or no, but still, who cares, man? Just stay here. See, this distance between the opening prices, this itself is a confirmation or a PD array for you, that if this is broken, like these are the true places from where price reports itself from, to and from, basically. And you'll see it if I'll mark this one out. Okay, basically it all comes back to market maker models, but time is more important in this. Time is the only factor which was missing from my journey, I guess. And I know, like, from here price has to expand below, like literally it has to expand below, nothing else. There is nothing it can do, and it did. Here, when this happened, you see this is where the PD arrays come in between, right? So since we have this candle as a down close candle, right, the next candle which pierced itself inside this CSD right there, okay, this candle, this one, you see where it's forming. This one is a bearish order block, right? This one is a bearish order block which is formed exactly at the true open, aligning itself together. So this candle becomes your what? The actual CSD, right, which is aligned itself with time. So if you would have taken this entry right there, and you would see this happening a lot of time, like you'll see that there is a crack in correlation, but you'll see this price wicking above again and again. But then what price is actually trying to do is align itself together with the true opens, right? So this would have been the entry. But anyways, any entry, like, as long as I'm risking my managing my risk properly. You see how perfect that was. Look, price mitigated itself right there, right? You see it twice, and price delivered lower. But what I did was, my mistake was, I just saw that since news here delivered so lower on this 2 a.m. candle, while here we were just in our accumulation phase, the 2 a.m. candle right there. Even though it was a small time manipulation higher, my human error, or the psychology in my mind was, look at the pound, how perfectly it expanded. So I was thinking that there will be another double manipulation of this, right? And this sweep should be a body closure, like the body should close higher than this body, right? Then it's actually the actual sweep for me, or the Kraken correlation. And I closed my trade around here somewhere, like close to break even. Like basically my entry was up there, right? This was my entry, and it was like not even 1 hour for me. So this is a human error which I encountered today, and I made a journal out of it. But if you see how like reactive this became, like how I say, the pound, it just didn't stop. And pound was doing the same thing, you see over here. See this candle, we have a PSP here. This candle itself is aligning itself with what? The true opening price. And both the daily true open and the London true open. And this candle came back up into it, right? This one pierced through it, and then we moved below. London did not struggle. Pound did not struggle at all, because it was aligning itself already with what? The true opening price. And then there was a breaker over here in the UAE, Euro USD, and over here in the pound I don't see it, like it's just a mitigation. So anyways, what I'm saying again, here we come back into the reaccumulation. Where? Exactly at the opening prices. You see how we are navigating the day. From openings to openings, from openings to openings, and you'll see it happening again and again. It has to report itself back to the true opens. It's like it's a command post or something, true opening prices. And the price is just messengers or foot soldiers. They just go eliminate the liquidity, and then they come back. It's like the cavalry or the infantry, right? You see how it accumulates itself at the opening prices. It's like there is something about these opening prices. And look, again, it's the same thing. Price came back, accumulated. Here you see this one candle. It's a bearish order block, right? Aligning itself with the true opening. And along with this bearish order block, we have a change in the state of delivery right there. Price runs back into the opening prices. Since we have this change in the state of delivery, this showcases bearish movement again. Price runs back into it, and then it drops, right? So you'll see this happening again and again. We target these lows, but then price by now is too weak, or it has accumulated way too much for it to like even stop to reaccumulate. So it just distributes. From here onwards, what do we do, right? What we do is we create another opening right there, which is the 6 a.m. opening. This one, okay? This is 6 a.m. opening, which is the opening according to quarterly theory, the New York opening. So since we have the 6 a.m., we need a 7:30 true open. And right there we had a Kraken correlation, by the way, along with, I guess it was not this one. I guess not this one. It was another one. We had a Kraken correlation late, like very late. It was a wide range Kraken correlation. That's what made it so juicy. Like it was so perfect. The more wider the range of the Kraken correlation, the higher the price will deliver. You should rewind that and listen to it again. Yeah, right there. So we have what? This is the true open, 7:30. Here also it's marked, right? You see how it's just, I don't know how. The moment it creates a true open, price hunts a liquidity. Look at this. Price hunts a liquidity here, goes back into the true open, reaccumulates or something, I don't know, it's like an armory or something. Price goes to hunt another liquidity, and then it creates a crack in correlation, right? So over here, again today I made another human error, which has it was a kind of a hassle for me. I literally, like, I sent this thing in the group, in the Telegram group, that price has to, like, somehow retest it and then go higher. But my human error was what? I placed a limit order and I left it. I didn't even check the lower time frames, what was happening. I placed a limit order right there. Once we had a change in the state of delivery right there, the TCISD of this daily cycle. And I was thinking the price has to come back down, of course, right? And then we deliver to these highs, which is like really simple trade, like simply amazing, like, perfect. Everything was aligned. This is where I sent my picture. I mean, not my picture, the charts picture. But what happened, the moment I sent the picture, right after I sent it, like, there was a major expansion. Over here, I want you to focus. Like, if you miss out something like this, I want you to focus. What happened? Like I mentioned, any PDRA, fair value gap, or an order block, which is aligning itself or coming off of a true open after a correlation, crack in correlation, that becomes very reactive. And which can be the most reactive PDRA apart from a breaker block? We have a low, we have a high, we have a lower low, we have a higher high. Coming off of what? Number one, coming off of a crack in the correlation. Number two, we are running below the daily opening price, right? We are running below the true day open. We are creating a crack in correlation at the bottoms of the New York opening prices, right? And what do we have? A breaker block. What price does? Price candle of the body of the candle, it breaks above this body. So this breaker block, since it's coming off of the true openings, this also forms another crack in correlation, because over here, if you'll see, price never comes back down, but here it will come back down. You'll see here. Your stop loss should always be below the breaker, because you never know whatever you target, like. But let me just show you what happened here. Okay, keep an eye on this. Sorry, this is a precision candle, right? This one. This is the breaker block, because it's the highest up close candle before the down move. Here we tap in, here we do not tap it in. You see this? We're way above here. This one taps in perfectly. So this was the actual entry. And this was my mistake. Why? Because I didn't check the lower time frame. Anyways, I would never do this. Like, I'll make a note of it, and I made a journal out of it. You guys should do as well. And what happened after this? Price went where? Again into the reporting from one place to another. This true open reaccumulates, sends it back to where? I cannot make this up right now, I swear. Sends it where? The whole day I'm looking at this and I'm confused, like, how can I miss this, right? Look, this true open sends it back to this. Where, what do we have? A fair value gap right there. And we have what? A change in the state of delivery right there. coming off of the daily opening, right? Coming off of the Kraken correlation, coming off of the true opening prices of New York. Moving ahead, here a lot of people would be selling, like, yeah, we have a sell. No, the narrative is bullish. Narrative always it moves forward, so we don't sell. Now this, again, we took out this liquidity, right? Now it has to do something once it takes out the liquidity, but since we are already taking off from the true open, let's see what price does. We have an order block, right? Goes right back into this, and then what happens? What happens over here? We have the opening of 12 p.m. 12 p.m. If we have 12 p.m. opening, we will know that price has to again reaccumulate or manipulate, and then create. We have to wait for the 130 opening price. What it does, it manipulates higher, comes back down towards the opening. Again it manipulates, again comes back down towards the opening price, and now we're closing the true opening. We have the true open here as well, right there, which is the 1:30 p.m. You'll see this happening every single day. This is your blueprint, basically. Like, if price is at a true open, it has to expand from it. All you need to do is find your liquidity. Find a zone of liquidity where it will go. That's it. You see how it's just coming back and forth towards its own like command post. Look, it will not do anything until day closes, right there. So where was this terminus, by the way? One more thing, this line which I've created, where did this report to? Price reported from these lows towards these highs. Why did it stop here? What was the purpose of this line? (6 p.m. Sunday). We cannot make this up, actually, right? Even if you take this 7 p.m., we have this PD array which is aligning itself together with the opening prices, right? So we have this and we have 6 p.m. So this place is where price would have reported to, and it did report at least to the 50% of it, right there. Now it's here. We'll have another opening, right? Tomorrow we'll have another opening. We'll seek higher, seek 50% of the range again somehow, then deliver higher. These are your reference points. These are your expansion, and this is the reason why you'll see price accumulate, reaccumulate, and it'll go back and forth. And this happens every day, guys, every single day. We need to just focus more. That's it. All right, so this was it for the video. I hope you guys found it insightful and boring, of course. I'll see you guys in the next video. Take care and good luck.